We are always looking for freedom to follow our passions, travel, retirement, etc., etc., to live the life of our dreams. But this is only possible if we have a systematic and disciplined approach towards our life and more so towards our finance. Future belongs to those who pioneer it. Some good habits help you stay in the pink of health in the long run, and in finance also the same principle is applicable. To build health and wealth requires discipline and regularity and a big push to achieve your dreams. However small an amount is, one should start investing early and regularly. The answer to the above question probably lies in the systematic investment plan or SIP. Money makes money, and when money that makes money makes more money, it is compounding. The concept of SIP works on principle of compounding. Hello friends, welcome to the channel of Wealthfinmart, and today we are presenting one of the most powerful tools of investing, or you can call a tool for making money. Popularity of SIPs across globe. SIPs are common in nations like Singapore, Malaysia, and the Philippines, where the mutual fund industry has experienced recent significant growth. SIPs are a tool for long-term financial planning in these nations, including asset accumulation, retirement planning, and planning for education. Similarly, in the United States, the concept of SIPs is known as dollar cost averaging, DCA, and it is a popular investment strategy among individual investors. DCA involves investing a fixed amount of money regularly in a mutual fund or ETF, regardless of market conditions. In India, for example, SIPs have become a popular investment option among retail investors, with over 6 crore, 60 million SIP accounts as of March 2023. SIP investments in India have grown rapidly in recent years, with a compound annual growth rate (CAGR) of 16% over the last decade. SIPs, or systematic investment plans, are a well-liked investment technique in many nations around the world, particularly in nations with thriving mutual fund sectors. As more investors have come to understand the advantages of making regular long-term investments, SIPs have grown in popularity in recent years. What is SIP and why is the world gung-ho over it? Systematic investment plan refers to bit-sized investments made in mutual funds schemes as opposed to investing a large sum at the beginning of the investment period. It is a smart and hassle-free mode of investing money in mutual fund where a predetermined amount is debited from investor's account via icici auto debit facility. It is a simple and easy way to achieve your financial goals. SIP adopts the rupee cost averaging concept wherein more units are purchased at lower prices or lesser units at higher prices, so your investments can manage market volatility better and stay healthy. Aim to reap more. Benefits of SIP. First plus factor. Convenience and compounding. By investing a small amount on a regular basis, investors can conveniently build a much larger corpus at the end of investment period without having to shell a large sum at the beginning of it. It also creates the compounding effect, which gets added to the units of the previous investment. Second plus factor. Lower risks. Investing through SIP lowers the risks as the investment amount is spread out over the entire investment period. Each SIP investment comes at different points of time, catching the upside or downside cycles of stock market. Third plus factor. Disciplined investments. SIP investments help you build and develop a habit of consistent as well as disciplined investments, which are very beneficial to the investor in the long run. This helps to manage market volatility. SIP gives investors a way out of this hassle by regularly investing and avoiding the risk of market timing. Fourth plus factor: lowering the average cost. In SIP you experience low average cost, courtesy dollar cost average. You invest the same fixed amount in the same investment at regular intervals over an extended period of time. A typical SIP entails monthly investments over a period of 10, 15 or 25 years. You are generally allowed to start your investment with a modest sum. Fifth plus factor: ideal for new investors. New investors who are not very sure about the market or find it difficult to invest lump sum can start investing small amounts to gain confidence in the stock market and understand the analytics part of SIP. Side effects: a well-liked financial strategy called a systematic financial plan, SIP, enables investors to routinely invest small sums of money in mutual funds. SIPs have a number of advantages, but there are also certain disadvantages that investors need to be aware of. 1. Market risk. SIPs are subject to market risk, which means that the value of the investment can fluctuate depending on the performance of the market. In a bear market, investors may lose money. 2. No guarantee of returns. SIPs do not offer any guaranteed returns, and the returns depend on the performance of the mutual fund. 3. Tax implications. SIPs are subject to taxes, and the tax treatment of the investment depends on the type of mutual fund and the holding period. 4. Dependency on fund manager. The success of a SIP investment largely depends on the skills and expertise of the fund manager. A change in the fund manager or a drop in performance can impact the returns earned by the investor. Freedom SIP, Mitra SIP, Pragati SIP are some new forms of SIPs gaining popularity in the recent times, and lot of action is happening on these types of SIPs. Nowadays, SIP also comes with a life cover called Century SIP introduced by Aditya Birla Mutual Fund. So come start investing small portions in size, but they are big on potential and create a wealth for legacies. Life के हर नए सफर की शुरुआत SIP से is a tagline given by Axis Mutual Fund. Some opportunities don't come twice. Let's consider few examples where SIPs have created success stories for investors. A SIP of Rs 10,000 started in year 2001 in HDFC Children's Fund has given a CAGR of 15.80%. Amount invested 21.20 lakhs valued as on 31st October 2018 is worth 102.3 lakhs. A SIP of Rs 10,000 started in year 2001 in HDFC Top 200 Fund has given a CAGR of 21.04%. Amount invested 24.60 lakhs valued as on 31st March 2017 is worth 311.56 lakhs. A SIP of Rs 10,000 started in year 1993 in SBI Magnum Tax Gain Scheme has given a CAGR of 16.89%. Amount invested 31.90 lakhs valued as on 30th September 2019 is worth 481.42 lakhs. A SIP of Rs 10,000 started in year 2002 in ICIC Multi Asset Fund has given a CAGR of 17.10%. Amount invested 24 lakhs valued as on 30th December 2022 is worth 173.20 lakhs. A SIP of rupees 10,000 started in year 2004 in UTI Midcap Fund has given a CAGR of 16.12%. Amount invested 21.70 lakhs valued as on 30th December 2022 is worth 112.46 lakhs. There are many more other great stories and the list is endless. Moral of the presentation: never underestimate the power of compounding. If you stay invested long enough, it will work for you. That is why SIP is called the eighth wonder of the world. Little by little becomes a lot. Identify your financial goal. Take the help of financial planner to select the right fund and use SIP tools to achieve the goals. Hot for today: sound investing can make you very wealthy if you are not in a too big a hurry, says Warren Buffett. Mutual funds are subject to market risk. Please read the scheme-related documents carefully and discuss with your financial planner before making any investments. If you like the video, do share and subscribe and punch the bell icon. Thank you and goodbye.